Welcome to the Veronica Edwards Show, first ever live. I'm so excited. Thank you guys for joining us. So thankful that this is our first season on YouTube and our first live ever and our first live for 2026. So I would love to bring in my partner in crime when we're talking about CPA tips, Miss Elena Anthony, owner of Amplify Accounting and Consulting, and who's going to be my boss this tax season. Thank you very much, Miss Anthony. How are you, friend?
I'm fine, but I'm not your boss.
She will be. She will be. Ooh. So thank you guys. Thank you guys so
Hi,
much.
everyone.
Hi, everyone. We're on live. Please make sure that you like and subscribe. But also, we're going to be keeping an eye on the chat. So we're going to be talking, but we also want you guys to ask any questions. And we're open to questions for small business owners and for individuals for the tax season 2026. So, Elena, friend, how are you?
I'm good. I'm in tax season just started, so
Yes.
it's already a little crazy, but it's okay.
Yep.
And I'm in rental world over here,
Yep.
so we're just praying.
Yeah. Yes, for those that have not watched any of the prior episodes, Elena is in Queens, New York. Don't want to give your exact location, honey,
Yeah,
but
yeah,
you are
yeah.
in
I'll do
Queens,
that.
New York. So we got about 10, 12 inches of snow this weekend.
Yes. There's literally no space in front of my house. It's just strictly snow. I had to, well, Ryan dug my car out last night,
Shout out to
but then
Ryan,
there
her
was still
husband.
like snow. It still was a little bit of a struggle. So I had to do some digging a little bit this morning. So,
See, we were supposed to have 10 inches, then it went to 3 inches, then it went to maybe some ice to where we got nothing, and the kids just went back to school today. we're,
wait a minute. Why did
we're
kids just go back to school if y'all didn't have snow? Well, you didn't have ice.
I we had a little ice in certain parts of the county, so
Okay.
you know how
Okay.
that works. So
Okay.
yes. So we're just getting back. CJ had a 2 hour delay, my son. So I'm today was my first day outside in about a week.
Okay. Well, it's not too bad. I mean, I ran out of storm snacks, so
Yeah,
that
we
didn't
ran out
work
of
out too
snacks
well.
yesterday. So I was like, it's time to go. So yes, so Elena, please tell everybody about you, how we know each other, your journey to being a CPA before we get jumping into tax season 2026 survival guide.
Okay, so let's start with how we know each other. So I actually met Veronica through a friend from church who she's now married to.
Yes.
And so when we first met, we both realized like we were in the accounting space and we just connected on that. And then we recently reconnected
hmm
because, of course, we're both CPAs and, the numbers is a thing. And also, I would say because I finally like really put it out on social that I was doing like taxes and stuff like that. I
Exactly.
really was working from the referral standpoint. So I really wasn't talking about it on social like that. And so we end up connecting that way. And so I have, shoot, I've been doing taxes. I just realized it's been 22 years, which
Wow.
I
And
would
you're
say don't add
young.
that up, but I know
Yes.
I look good for my age, so
I'm
I'll take
period. And I
it.
didn't know that you learned how to do taxes from your mom. Shout out to Sister
Yes, from my
Jackson.
mom. Yes. My mom has been doing their taxes for so long. And she was like, when it was time to do my taxes, I'm like, what to do? Because, I'm in high school. And she was like,
Right.
oh, no, I'm not doing your taxes too. Let me show you how to do your taxes. And once I learned how to
Oh,
do my taxes, I had an interest. I already had an interest because I never wanted to pay a lot of taxes. So
right.
I already had an interest. But the first time, like I did my taxes, she checked it. I ended up owing $5, and I was tight. And from there, we were on the thing like I need to figure out how to do my taxes and not pay a lot of money.
Period.
so,
Yeah.
so yeah, I've been around for 22 years. I have a boutique firm called Amplify Accounting and Finance where we do tax preparation, but we really love tax planning because that's the way you
Yes.
figure out how to legally minimize your taxes.
Mm-hmm.
And so, yeah, that's what I do over here. I am a CPA. I don't tend to tout it, but I am a CPA. And yeah, Veronica's my girl. I love her.
Yes, I love Elena. And Elena also went to UNC Charlotte. We both have that
Sure
in common
did. Sure
too.
did. Yes,
Lived in Charlotte for a
alumni.
long time. I'm originally from New York. She's now in New York. And I
Yep.
always remember your anniversary because I feel like you got married the year my son was born. So
Yes.
2015.
Yes.
Yes. So you're
2015.
coming
So
up
almost
on those
11
letters.
years. Almost 11
Yes, we
years.
still
Looking cool.
together.
Yes, we still
Yes.
together.
Can you can you believe me and Carlos this year will be 17. 17 years that we'll
Man,
be married and 18 years together because it was a quick it was a quick grab it up,
you know when
it
you
was
know
very quick.
you know. When you know
Yes.
you know.
Exactly. So for those that don't know, oh, Ebony, thank you. I'm also watching the chat too. Our friends of the show, the next live will be with Ebony Sharonda. Check out her page. She has amazing spiritual guidance, business talk, all that. She's a friend of the show. But I'm a CPA. I will be 12 years old this year, Elena, as a CPA. And I started out just traditional, worked for PricewaterhouseCoopers, a big accounting firm, and worked for Rubbermaid and some of these bigger companies. And back in 2018, I finally said, let me just start this business for real because it was getting crazy out there. And so now I'm 8 years old and I work with small business owners. I work with nonprofits and for profits. I've been doing a lot of teaching recently. Elena and I have both been working with the engineering firm that works with NCDOT. So I have a class I'm going to be teaching tomorrow, and I'm going to be teaching with the Small Business Center here in Asheville. Holla at me. I mean,
We
you
love
need
that. We
somebody to do
love
a little seminar, a
that.
little 1-2.
We
Holla at your
love
girl.
that.
And Elena also is doing these workshops as well for taxes. And I heard you did amazing, darling. I knew
Thank you,
you would.
thank you, thank
I knew
you.
you would. Yes. Okay. Look at Charles Xavier. That's Carlos in the chat, Elena. Thank you, honey. I
Hey,
love seeing all these.
Carlos.
Yes. And Carlos did give me a tip with lives because this is my first live ever, personally, any of the things. And he was like, you got to interact in the chat.
You
It's
sure
all about, so
do.
we got to shout out Carlos, number one husband, along with Ryan. Shout out to Ryan too, but he's busy doing renovation, so we're not going to penalize him.
Well, he's probably relaxing right now because he only jumps in when necessary. Like he'll paint at
Yes.
this point because we need to save some money because we over budget, y'all.
Painting
We
is
over budget.
expensive.
So
Yes.
he's gonna paint and he'll do a few things, but most of the time we bring in the team, and that's
Yes.
the plan.
Yes. We're going to start putting our Cash App and all that information towards
What?
Elena's renovation fund
I told
because
somebody the house is up 50, okay? The house is up 50. Ryan and Elena won.
Man, but I'm so proud of you for just getting it and doing what you had to do as soon as you bought it. Elaine just got her
Oh
house
yeah.
with October, and you've been renovating since then and in the
Yeah.
winter of New York. So you know how it's going to be. But when you're done in the summertime, I'm trying to come. I
Yeah.
told Carlos we got a place to stay.
Exactly. Come on through. Come on through. We got room. We got room.
Yes, yes. Okay, so last week, Elaine and I had an amazing episode. We have a CPA chat edition of the Veronica Edwards Show that we do about every other month. And last week's episode was on the 2026 tax guide. So we touched on a few things, but for those that did not get a chance to see it, please go back. Also, like and subscribe. But we were going to talk about the top 10 tax deduction mistakes. And as I said in the beginning, Elena will be my boss. She's not saying it, but I will be working under her tutelage. I will be getting back into doing taxes for folks. Right.
Let's
Um,
get a little clarity on the boss situation.
right.
Veronica is bringing in her own clients. She is going to work with some of my clients, but she's bringing her own clients. So to me, I'm not thinking boss. Like we are partnering.
She's going to teach me. You're a
Yes.
mentor in this
Yes.
space.
That's what we're
Yes.
doing.
Well, I appreciate it because, again, I'm always coaching people on financial literacy and multiple streams of income. And everyone's been saying, Elaine, you already know, but you're a CPA. You don't do a little bit of taxes? And I'm like, I do
I
my
guess because you know
taxes.
what? I think everybody thinks all CPAs do tax.
They do. They think
Most
that.
CPAs are audit.
I was an
Most
audit girl. I was an audit
Yeah.
girl.
I didn't like audit. Even though funny enough, I should like audit. Like
Yeah,
when I
you
really
give me a
think about it,
forensic type about you.
yeah, I
Yeah.
love the research. I love that part, but I'm not an audit girl. I love being on the controllership side, the tax side.
Hmm.
Like I like actual numbers. So
Yes.
what are they?
Right.
Whereas the audit, you're doing like the research and making sure the information is correct. So that's
Right.
why I know I should like it because I like research.
Right. Right.
But I'm a tax girl. Blame it on my mama.
Hey, Miss Jackson. But I feel like because Elena's maiden name is Jackson, which was an amazing last name. But yes, I felt overwhelmed with tax. I felt like I have to know all these laws and da 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 da. And then I meet amazing people like yourself, and you're like, we just put it in our tax software. Like,
Girl, well, not that we just put it in there. Like, you definitely need to know stuff because you wouldn't know what to look for
right.
if you didn't know it. But it's like if you're not sure about something, it is kind of like you go and you research it, you figure it
Yeah.
out because the
Yeah.
tax code, I don't even remember how many codes there are. I think it's over 4,000. It's huge.
It's
Like, it's a
stupid.
huge, and we ain't going to talk about the changes that just happened because
The big,
everybody
what is
is
it,
praying
BB?
over
What do they
that.
call it now? BBO, Big Beautiful Bill Act,
One big
BBBO?
beautiful bill. Wait, one big
Big,
beautiful. Wait,
big, beautiful bill. Yeah,
I just
OBBB.
yes, OBB.
One
Uh,
big, beautiful bill. Yep.
yeah, there you go.
Yes, that part.
Or
So,
HR1. If you're looking it up, just look up HR1.
yes. So, anybody that is watching, if you have any questions, let us know. But we do have some items that we did want to talk about. So, I'm just pulling up, Elena. We were talking about some common tax deduction mistakes.
Mhm.
So, what do you want to start us off with? There's a lot to choose from.
There
What
is
would
a
you
lot
say
to choose
is
from.
the
But I
first
do
that you
really
would want to
like the
start with?
first one. I just had a conversation about that. Actually, I feel like I have that conversation on the regular. Like,
I do.
using one bank account or credit card for everything. So, including your your personal with your business and actually commingling the funds. Please do
Yep.
not commingle the funds. Forget, like, I always talk about the legal aspect of it, but just for sanity wise, like, as a business owner, you're already busy. Nobody, I
Right.
have not met a single business, well, maybe one, but I haven't met a business owner who's really focused on the financial piece. Like, you want to know where you're at, but
Right.
if you're running a business, it has, like, you want to make sure you're making money, yes, but you're focused on running the business.
Right.
So a lot of times what happens is when you're starting to mix all of your personal with your business together, when it's time for tax time, do you even have time, first of all, to separate out all those expenses?
No,
And I'm
ma'am.
telling you, because I have another business and I knew better, but it is hard to
Yeah.
comb through everything that you have
Right.
and find all your expenses. You end up missing expenses because something
Mhm.
hit a personal card and not your
Right.
business card. And
Right.
so you want to try to keep all of that separate so that you can make sure that you do not miss any deductions because you have to claim your deductions in the year they were taken. Okay,
Hmm.
like all
Hmm.
your expenses. So just make sure that you do not mix them. Now, my thing about it is though, from a legal standpoint, there has been a case when a judge has said, "Oh, you've pierced the corporate veil
I was
because
just gonna say that.
yeah, because you've mixed it." So
Yes.
now, from a legal standpoint, if something happens, hopefully no one's ever sued. But
Hmm.
now, under that case, the person who was suing the business owner was able to go after their personal assets. And
Yes.
truthfully, we don't have time for that. You don't want to risk put your
Yes.
personal assets at risk because you commingled
Right.
your funds. Don't do that.
Yes. I have a former client that commingled excessively. And and recently there was some legal trouble where they needed to pay some people and they're trying to do bankruptcy and all these things. But like you said, you've pierced the corporate veil now. So we can go after your personal. Just because you're an LLC does not
Mhm.
mean that I can do whatever I want. And now you can't come for me personally. So,
Right.
and it gets messy when it comes to divorces as well. So
It
I'm
does
just giving you that
very, very.
flag.
I've seen that too.
Yes.
It
All
becomes
right.
very messy.
So yeah, so definitely do not commingle. I do not work with folks that commingle their funds. What about what we have number two on the list? Home office.
So make sure the home office expense is very, it's so funny Because literally, I'll be working with a client, like work with them for years, and they're like, "Are you claiming home office?" And I'm like, "Yes." That's why I asked you for this information, this information, this information. They're like, "Oh, okay, okay."
Right.
But there's things about home office. Everybody thinks because they have a business that they can claim home office, and that's just not the case.
Right.
You have to have a dedicated space. So it
Yes.
can't be your office slash guest room.
Or behind me.
Oh, I was gonna say on your kitchen table. Unfortunately, it has to be a dedicated space
Yes.
that is your home office.
Hmm.
That space, you have to take the percentage of that space too. So it's not like everything in your house now becomes deductible either. The square footage of that space, that
Right.
percentage compared to your full home square footage becomes a percentage you use to either use all of like your utility expenses, internet, all of those things as
Yes.
a percentage, or you could just do the simplified deduction, which is just um, they're looking at the percentage of your space, and they only go up to 300 square feet on that, by the way. And they're just using a simplified number across the
Sure.
board, using that percentage to say, okay, out of all their expenses, this is what it is.
Right.
But you can use, if you do have it, you can use your actual, like, I have people submit like their utility bills, their internet bills, with water bill, everything. And we could use it from that way. Oh yes,
Yes.
do not commingle. Please don't. It's not cute.
Yes. And
And
shout
you
out
don't
to
want to have to pay
Christine.
for
Hi,
someone to
Christine,
figure
in the
that out
chat.
for you either.
Yes. So when it comes to that home office, it's always funny too because people on the bookkeeping side, they'll just be like, I can just run my mortgage through, right? I'm like, no,
No,
no, no,
yeah,
no.
that's a good point.
You
Mm-mm.
can't do those things. So what we're talking about where we're taking a percentage, this is something that we're doing that's a non-cash transaction, meaning it's not something that you can pay with cash out of your bank account. It's something that you have to do later and we call like a tax adjustment.
Right.
So we will make a tax adjustment for it. And to piggyback on that too, Elena, what about internet and cell phone? Because I'm a little bit liberal where I say you could write off 100% of your internet, 100% of your phone line and not do the percentage. But I've heard some people say, well, if I've only used it 50% of the time, but then I've heard the IRS can't prove it. What would you recommend?
So I typically recommend a percentage, but it really depends on the person. Because some people, they literally have a dedicated phone
True.
in a dedicated space that they have like their internet service through. So like if you have like actual, well, we're talking about home office, so I'll leave it at that. If
Right.
it's home office, I personally prefer a percentage. Now
Okay.
I know there are people, it depends on the client too, right? Because I have a client like he don't be on the internet. He's just not, he's a little bit older. Like that's just not who he
Right.
is as
Right.
a
Certain people, I'm
person.
like, you tried it. You tried
Yeah,
it.
like I talk to him, I know he don't he when we get on together, I'm guiding him through like that is just not his MO, like and that's not his business. Hey
Hey,
Carla.
Carla. That's big sis. Shout out to Carla
I
Edwards.
know.
Yes.
All the people. Oh,
Yes.
say
I
hi to
love you, big
Christine too. Oh,
sister.
that's so
Big
sweet.
sister asked me a question, Elena. Hopefully, I answered it properly. Not to put Big Sis business out, but Sis got a hybrid this year. Sis got a hybrid last year,
Mhm.
but it was before September 30th. I saw that after September 30th, they changed this Clean
Yes.
Vehicle Act. I'm sure I'm butchering it, but Sis got it in June. Praise the Lord, Sis got it in June.
Look, yes, because after September 30th, 2025,
Yes.
out.
So is it up to, is it like $4,000 or is it 7,500? There's a credit
It
that you
was
can get.
7,500
That's what I thought.
at the time. Now of course it's zero, but it was 7,500. So yeah, it's
Okay.
out now, unfortunately.
So
Which is why
hybrids.
certain I mean, I think they're still friends. So a certain friend to the current administration
Hmm.
was a
Musk.
little upset with the
Right.
one
Right.
big beautiful bill because
Yeah.
that affects his business also.
Yes. Yeah. So
So
hybrid. So people that are hybrid owners, just know if you buy a hybrid after September 30th, you won't have the same benefits. Or if you did purchase it after September 30th, 2025, you won't have the same benefits that you would have had prior to. So please talk to your tax accountant about that.
exactly. But
Yes.
back to what I was saying. Normally, I'm just very
We were talking
much
about internet. Yep.
Yeah, I'm very much like, okay, use a percentage, especially if a person I know they're kind of like, you know, just, you kind of know your clients and their
You
lifestyle.
know, right,
Now,
right, right.
will the IRS pay attention? Truthfully, it just depends on,
That's
I
what I
don't
be
really think
saying.
I would say I don't think they care. But what I will say is, you don't know what revenue agent you will get. I mean, audit percentage is very low. Like,
Yeah. Yeah. I tell people all the time, you have less than a 5% chance of being audited if you file your taxes on time, you filed the last
right.
three
I
years, you
say
don't have
three.
anything
Yeah.
egregious.
Yeah.
Right.
So it just depends on the person, but I don't really think it's like a huge deal personally.
Okay. All right.
Unless you like have a phone bill. Now, if you have a phone bill and you got like 6 kids on there and you know what I'm saying,
Right. Yes.
you pushing it. You
Exactly.
doing
So that's what for me, I do 100%, but it is my phone line, not my
yeah.
whole family's, and it's my internet, which is like $50 or something.
Hmm.
So I'm taking all of it. I'm just
Yeah.
saying that. I'm just saying I take 100%. So okay, now this is a fun one. Meals and entertainment and travel, honey. And this 50%, not 50%. Can we do a country club? Can we can I do my family reunion if I'm doing a Veronica Edwards episode? I mean, what can I write off for meals, travel, and entertainment?
Okay. So first of all, entertainment's out the door.
So why did they put that on there? I hate that they
It's been
say
out there.
that.
You know why? Because when they did the I always mess up the name of this one.
Wasn't
Tax
it like
cuts
early?
and
Was it early
jobs.
90s?
No, from 2018, from the Tax Cut
Okay.
and Jobs Act, they took
Okay.
out entertainment.
Really? Okay. I thought it was gone for a while because I remember people would
It
do
might have
like
been. Let me think. Don't quote me, y'all.
what's the things like when you
Let
have
me look.
like the box, the club houses and
Oh,
like
like the
for the
clubhouse and
sports,
things like that.
rain, country clubs. But you're
So
right, you know better than me. But I thought back in the day we could write everything off. And then they
you
started
could
changing
back in
stuff.
the day, and I. So let me say this about the clubhouses and stuff.
Because I had some
For
memberships.
the people with the larger corporations out here,
Yes,
like those things fall up under different
exactly. Dues and subscriptions, memberships.
categories. So,
Hmm.
it's team building and
Yes, strategic planning.
client acquisition, things like
Yes.
that. So it's going to be different. But like if you're trying to write off like a sporting event and stuff like that, where it's just your small business, don't do it. Don't do it at all.
Ooh,
Now
gotcha.
for the meals and travel, if you're for the meals, if you're meeting with someone, is you're discussing business, then yes, you can write that off. Definitely hold on to what I always say is scan your receipt. You should have some
Yes.
type of app to scan your receipt in.
Yep.
Sometimes you don't need an app though. I always tell people the cheat way is this, like if you have some type of cloud program that is attached to your business records and things like that, what you could do is just create a folder, put the
Google
year, make
Drive.
sure you have every month,
Hmm.
take a picture, put it in that cloud, label the picture, and label it good now, okay? Business dinner with so and so, this date to discuss blah, blah, blah,
Yes,
and
ma'am.
just put it in that folder. You can do it also because the thing about receipts these days, they do wear off, like the ink
Yeah,
comes
they
off and stuff
fade.
like that.
Sure.
So you can do your meals. Now with travel, you can do so much with travel. Um,
You
so
can.
you were saying your family reunion.
I'm joking. I'm being facetious. But you do get family owned businesses. And
Yes.
say if me and Carlos had a business together and we take a trip and we're spending a whole day where we had, look at Elena's face, we had
No.
lunch, we were planning, and we have a strategic plan for the next 3 or 4 years. Can I write off that whole trip?
So that's actually an advanced, I shouldn't say it's advanced, but it is a tax strategy. If Carlos is on your board and y'all do a business retreat that turned into a vacation, you could write off that whole trip.
Right. But I'm
So
not a
that's something to
nonprofit.
put
I
in
don't
that
have a
pocket.
board, but he is an employee of Balance Virtually.
As long as he's an employee also. So
Good to know.
yes, y'all can go do a team building, a
Yes.
planning retreat. You
Right.
can set it up where y'all, you work on the business for a day or two, and then a couple other days that is your, family time.
Okay, all right. I like
Mhm.
that. And also creative chart of accounts. I will say, without giving out all my secrets, check me out if you need some of my services, all legal. But there are a lot of times that small nonprofits, they're meeting a lot, they're having lunches a lot, and they are discussing business. But to just put everything under meals, because we haven't talked about yet the 50% versus 100%. No
Mhm.
other account, it seems like in accounting, has a percentage of the deduction other than meals and
The meal.
entertainment
Yeah.
outside of fixed assets and things of that sort. But
Yeah. And even with the 100%, so the meals are 50%. I'm just gonna let y'all know. Most
all
people,
meals, come on.
most people don't qualify for the 100%.
How do you qualify for the 100%?
You normally have to, I always, the example that I always use is like, especially, okay, let me, because of this storm coming up, right?
Mm-hmm.
Like the linemen, you know who the linemen are, like they go out and fix
No, ma'am.
I just forget
Oh, the electricity.
the
Okay.
electricity and stuff like that. Those type of they're able to do like 100% because it's like the type of work that they do and what they're doing.
But I
Like
thought if I
under,
took my employees out for end of the year celebration, for
only
we do
that
it a
way.
good year, I can
That's
get
not a meal
100%.
though. That's not a meal.
But if I just went to Starbucks and got a coffee and that's just a meal, I have to write off 50% of my Starbucks.
50%. And then y'all, I would say this too. I had a client who was like, "Oh, we can write off our meals." So they were going, I mean, everything, morning coffee. Um,
See, too
they
much.
go to gas station. They always had to go in. Like they always bought something from inside the gas station. Let me tell you something. The deduction is not enough
Right.
for you to dig into your profit that way. So also like make it make sense. That's the only thing I can say. Like just to be
Right.
swiping like, oh, I'm going from this site to this site, so I'm gonna get a coffee and I'm gonna run it through it. The deduction is not enough. I mean, you can
Right.
do it, but one of the
Right.
things like they were complaining about their profit, and I
Mhm.
was like, well, you like this wasn't a big thing, but I brought it to their attention. Like you had like $8,000 in meals
Right.
for the year,
Right.
like eight. And they're not a big team. So it wasn't like it was, taking the team out. You know what I'm saying? So I was like,
So you spending close to $1,000 a month.
and
And see,
you
and
only
that's
write off
actually
four.
and the red flag for the IRS is meals and entertainment. Like
Yes.
that they're gonna look at that if that looks unusual for the type of business you have, the other deductions. So yeah,
And
that's not an
I
area I
wasn't
like to play in.
Yeah, and I want to be clear. Like, I'm not telling you like if it's a meal that you're using for the business, fine. But I mean, like, just going out of your way, like, because you want to get a coffee every
That's your
day.
tax strategy.
Yeah, like every day. You need a coffee every day. You're swiping that thing, and then you're wondering. I mean, there was bigger things that were going on, but it was just like
Right.
you realize, like, this is higher than some of your other expenses. Don't make sense. It was higher than their office
Exactly.
supplies. Like, come on now.
Come on. And shout out to Carlos. Of course, you're on my board. I don't have a board.
Like,
Yes, honey, you're a part of all of
yes,
it.
you should be on the board, Carlos. Oh,
So,
and when you do
yes,
have these trips that you have, the IRS loves documentation. So we
yes,
should see it on the calendar that you have this retreat planned out. There should be an agenda. There should be invites. There should be like
evidence.
notes, what was discussed. Okay.
Yes,
You can't
action
just be making
items.
up trips. All
Right.
right.
I got to go to Universal this year. So, we're going to do this plan in Orlando. All right. So, next item. This is a good one. I get this quite a bit. Good old, do I depreciate or do I expense? What's fully depreciated? I get people all the time with stuff on their books for $100, Elena, on their balance sheet that they're saying is an asset.
Like what?
I think that they just feel like if it's a tool, if it's a
It should be
machine,
an
if
asset.
it's an asset and they
Okay.
don't understand the and.
Yes. Okay. So as a business owner, this is a conversation you should have with your CPA, your tax preparer, your accountant, whatever their title is. You should have like a dollar amount set, like a rule in your business. Like once it's over a certain amount, we are going to record it as an asset and depreciate it.
Hmm.
Certain things like $100 items should just really be expense. I think the lowest I've seen as a rule is like $1,000. But the bigger your company is, like the larger that amount should be, because
Sure.
we're looking at, I hate to use this word because I feel like it's too industry, but like materiality. Like
Yes. Yeah.
is $1,000 material? Is it a big deal in your
Hmm.
business? Like
Right.
depending on how much you make. So um for example, I'll use a couple of companies I work for. Like one company I work for, major financial company, $500,000 was not material.
500,000.
Was not, right? Another company I work for, they are huge in number, but profit, because they have high expense, profits are lower, right?
So they want to depreciate
a
everything.
hundred thousand dollars is material. You know what I mean? So
Hmm.
it just depends on the company. But as a small business owner, like I would look somewhere between, like maybe it's 1,000, maybe it's 2,500. I'm just making up numbers. You have
They
to.
love 2,500. When I
They love
worked
twenty five
for,
hundred.
that's actually in the chart of accounts, like small tools and equipment under
Right.
2,500. And so I feel like I read something with the IRS. It was either 500 back in the day. I don't know if it's bumped up to 1,000, where that's their minimum threshold. But I feel like most of my folks, I also tell them it's the years, because when it comes to depreciation, if you have something that's worth $1,000 and it's going to last 10 years, do you want to take $100 every year for 10
I'm
years?
expensing that
I'm
every
expensing
time.
it. Small, I find working for big companies and small companies, the big companies, they want to have higher profit, so they want to have less expense. Small business
Mhm.
owners, we want higher expenses for lower tax liability, so we want to expense everything in the year we purchased it.
Yeah, but certain things just don't need to be. And definitely that useful life is a big thing. So that's why I will also say it's important when you buy certain things to have a conversation with the person who does your taxes or your accountant, because
Call
a
me.
lot of time y'all do stuff and it just does not make any sense. You don't want to be in a situation. Also, I actually talked about this last week in my class. Your
Ooh,
timing of when you buy things,
come on now.
because if
Yes.
you buy something at the end of the year and it does not go into service before the end of the year, you have lost cash, because basically you spent money
Right.
and then you didn't get the depreciation because it went into service maybe on the first, the second, the third of the next year. So now guess
Right.
what? It's on the next year's taxes. It's not on your current year taxes. So
Right.
you need to talk to them about the timing, whether or not it should be expensed or depreciated. And then also, does it make sense? Do you really need it?
Right.
And I know sometimes people don't want to pay for like that quick consultation if you don't have like a package plan. Pay for the consultation.
And you're
I'm not
talking
trying
about
to
a
be funny.
consultation with a tax CPA that will definitely be under four or
It's
$500.
going to save you more money in the long run than to
Right.
just do it and then you mess it up. Just pay for the
Yes.
consultation. It's worth it. And you
So
get to write it off.
that part. And I said, Elaine, that leads me into vehicles, because
Hmm.
I always tell people, if you're going to buy a vehicle, then you need to talk to your tax accountant. You need to know that weight. And like you said, and when you're going to purchase it, to know how you can expense it. So I get this a lot. People will say, can I put this vehicle in the name of the business? I use it more than 50% of the time, but I do use it personally. Or I have a nonprofit and this is my personal vehicle, but I use it. I am the business. I do it for everything that I do. What is the rules when it comes to vehicles?
It truly needs to be ordinary and necessary to the business.
Come on, IRS language.
It really
Yes.
does. It has to be. It doesn't make, so I would say this. So like I would love, if y'all know the vehicle I want,
What you want, girl?
I've let it go, but I want an Audi Q8. But y'all, I don't
You
want to
can
pay for
do
the
it.
maintenance. I'm gonna just tell you,
You can do it.
I don't like paying bills. Okay, I'm gonna pay them.
And you in the big city, so that insurance is high.
Their insurance is high, and my car is old, so you know it's gonna be crazy on that.
Yes. Shout out
So,
to Jason Shea. Jason worked with me. And
hey,
my plant
Jason.
controller life. Love you, Jason. He's in Chi-Town now.
But like, I would love to write off, like to buy a vehicle under my business. Would love to. Why would I need a vehicle for
Yeah.
accounting firm?
And my business is called Balance Virtually, so I can't really say that I go in person to a lot of stuff.
It doesn't make sense. But if
Right.
you're like, a lot of times for my clients, like if you are, I have a few construction clients, funny
Yeah.
enough, a
Yep.
few. They vehicles, that makes sense. If you're in the real estate, that makes sense.
Yes.
I'm trying to think what else where I've seen a vehicle and it just made sense to me. I can't think of anything, but if you have a question, drop it. But it needs to make sense to the
Yes.
actual business.
Absolutely.
Otherwise, I do know of a person who got audited, and basically they had a credit repair firm, and they had the vehicle under their business.
Ain't no way. You just got an office job.
They were like, "Yeah, you got to pull that. That's not part of the." They was like, "Yeah, you could take the money out from your business, pay yourself, pay your car note, but that's not. It doesn't fit." They basically was like, "Nah, you can't
And
have."
rewind, why was that person audited?
I don't even know. I never asked them. They were telling me about it, and I was like, "Oh yeah, I mean, it makes sense because like, why
They
would you?"
were audited prior to you being with them.
No, no. So they weren't my client. They were just
Right.
telling
That's
me
what
about it. Yeah.
right.
So they were just
We
kind of
give
telling me,
that
when
disclaimer.
people find
Right.
out what you do, they be like, "Oh, let me tell you about this situation." So,
Yes.
so yeah, they were just telling me.
Yes.
Oh, for I see a question about any tips on
I saw
tracking
that.
miles.
Yes.
I love Mile IQ.
Everybody love Mile IQ.
Mile IQ. I love, love,
That's a
love
free
it.
app, right?
It's a free app. You can have it set to track every trip, but you have to just go in and say this trip is business, this trip is personal. But it's just easy, and you could just upload the report when it's tax
Yep.
time. It'll automatically tell you what your mileage is.
I
Now,
like that.
if you have been struggling with your whole mileage situation, you're gonna have to go back and figure that out. It's rough. What I always tell clients if they're kind of like a little off is I tell them hopefully they're getting regular maintenance on their car. Figure out where you
Hopefully.
were at the beginning of the year.
Right.
Figure where you were at the end of the year. And then like really hopefully you're not driving that much, but if you are, just kind of like go through your records and see like where did I make a trip to, what that address was, and how far did I travel. Now, one thing I have to bring to everybody's attention, and do not shoot me because it wasn't my
Just
fault.
the
I don't have nothing to
messenger.
do with it.
Yeah.
Going from your house to the location, that's not mileage to the IRS.
So I'm just going from my home office to my brick and mortar. Yeah. But if I go from the brick and mortar to deliver cupcakes and I have a cupcake business, then
Mm-hmm.
that mileage from the bakery to the got you.
Mm-hmm.
Right.
Yeah.
Yeah.
So once you get to your first location, any movement in between there, that's so like for example, since my renovations, my plumber, who is also a good friend, he's all over the place. Like he's in Brooklyn, he's in Queens, he might be in the
All the
Bronx, he might be in
boroughs.
Long Island. He's going to stop at a store to get parts. Once he gets to that first location, all that mileage after that, he gets to write off.
Right. And the rule is it's either mileage or the direct expense method, right?
Yes. And once you go direct, so your actual auto expenses, you can't go back.
So they don't give you like, okay, after 4 or 5 years, like cash versus accrual. Okay.
Mm-mm. Once you
So
go on that particular vehicle in service, once you go
they serious about
actual,
them
that's it.
vehicle deductions. Yeah, because I feel like you always get more on mileage if you use your vehicle for the mile. Like I just never understand. Now it's up to like 70 cents, something crazy for miles.
Yeah, I
So
think it's, don't quote me, y'all. I think it's 70. Is it 72?
it's probably up. I feel like it was 70 last year.
Yeah, because I thought it was like 69 and I looked it up for a client a couple weeks ago. I was like, oh, I think it's
Yo, it
72.
jumped quick. Okay, so the next thing for sure, contractor versus employee.
Woo! I'm gonna tell y'all right now, this has been a big deal with the IRS. Okay,
Oh, and
it has
today is
been
the
a
last day to
thing.
do 1099. So that's why I'm
It,
throwing it in
it is the last day. Well, it's the last day
without
for,
penalties.
yeah, through QuickBooks. I feel like one of the services I have, like maybe 1099.com, said that you could do it through. I feel like they said through Friday. Don't quote
I
me.
got one person that slipped through the cracks, so I might need to do it. So yeah, I'm gonna look into that.
But yeah, so for your contractors, if you've paid them over $600, you need to issue them a 1099. Please issue them the 1099
Why?
because you will get fined by the IRS if you
But
do
if I don't
not.
get audited, how would they know?
So if you don't get audited, hey, who am I to
No
say anything?
harm, no foul.
But if there's an issue where you issue that 1099 late to that client has already filed, and then they got to do amendment,
They don't like them in minutes.
it might trigger. I'm not saying it is because the
Right.
truth is like I think they're using a lot of AI for stuff, but so it might trigger that way, but it might trigger. And sometimes I will say this, what I do know is like if something triggers for them, they don't always act immediately. Like they may just like, okay, let's see if this is like a normal occurrence for you where you're not doing it. But make sure
Okay.
that you do issue that 1099. I will say coming up for 2026, a good thing is that number goes up to $2,000. So you
Yes, it
won't have to
does.
issue a
Thank
1099
you.
if
Yes.
you paid between the 600 and the 2000 for 2026, which would save you some money in a way. But just know that some people still issue them. It is a good habit to do.
Right.
But make sure you
Yes.
have records. So make sure you have their W-9 on file because you only get like 2 years to not have that social for that W-9 before they come after you.
So you actually can submit a 1099 without social. That's
You
so
could say it was
crazy.
refused because you know what happens sometimes, like you don't get it, and that is tax time. You're trying to get it, and the person won't give it to you because they don't want it on their records that they made this income. But you want to be able to, of course, write it off. So you can submit it and say, like, the person refused to give the social. But
Right.
once that person refuses that first year, you do not work with them in the next year. I'm
That
telling you.
part.
Because if it
Right.
happens again, for that same person, the IRS may look for you to pay the money, the taxes
Right.
on that income because you are not obtaining the social or the W-9 from the client or the vendor as you're supposed to.
Gotcha. Okay. And so one thing I definitely wanted to make sure we get to, because we're staying on till 7, and
Mhm.
thank you guys for participating in the chat. We appreciate it. But when it comes to writing off health deductions and retirements, and does it matter if you're an S corp or if you're not? Because you have until what, March to pay towards your set plan. You can set it up at the end of the year, but that's usually for people that are not S corps possibly. So can they put that as a deduction, or is that an owner's draw? If they have the marketplace, can they deduct that if they're not an S corp? So what is the rules with retirement and health planning deductions for small business owners?
Okay, so I'll start with healthcare because that's easier. Healthcare, you can deduct the premium that you pay for healthcare from
Regardless
your
if you're an S corp, if you're an LLC, if you're okay. So that's
yeah.
not an owner's draw if every time you go. Gotcha.
Yeah, that you can deduct completely. So that's
Okay.
something you do not have to, it's a benefit, truthfully, to be able to
Hmm.
deduct your healthcare just because we know for a fact, we ain't even gonna talk about what the rates are for this year, but we know for a fact that healthcare for small business owners are typically higher than what you
Right.
would pay if you worked under someone because typically that employer would pay a percentage and you
Hmm.
pay a percentage. But as an owner, you're paying all of it. So you are able to deduct that premium that you pay for
No, what if
healthcare.
it's not a premium? Oh, I cut my finger. I went to urgent care. My business paid for it. It's just a hospital bill. Can that be deducted? That's what I was saying. Like, that's what I don't think you can,
So
right?
no.
Right. I got
No.
toothpaste and this and that, and it's toiletries.
No, only if so what happens is from that case, that's a personal
Sure.
deduction. Now, I will say if you have more medical expenses over 7.5 of your adjusted gross
Yeah.
income, then you can itemize that, write that off. The thing about that is it's hard unless you are going. I only in all my time in doing taxes, I have one client, one who has
Always
qualified.
one.
And that's because he was a business owner. He didn't have medical and he unfortunately had cancer and he paid for everything out of
Oh yeah.
pocket.
Oh yeah.
Yeah.
You
So
gonna
he's the
rack up
only
that
one that
bill.
I've ever encountered who had enough.
Gotcha.
People submit to me. I do the numbers and I'm like, yeah, nope.
Because what Elena's talking about is, again, I just say just do the standard deduction. But some people's like, no, no, I got enough medical bills and I've given to this charitable organization. And I'm like, it's like 15,000 for an individual. So if you have that, and then like you said, 7.5% of your adjusted gross income.
And if you're a high earner, it's hard. It's hard to hit that number. I know it seems like it's not because you're like 7.5%. No, it's hard to hit it.
Yeah. Yeah.
Yeah. If you think about
Definitely.
it, 100,000, right? So 100,000, 7,500.
Yeah. Yeah.
You got to come up with that, but you have to pay that much out of pocket.
And a lot of
So,
times we have $5,000 deductibles, and that's high if you have insurance. So then you're usually not hitting that.
mhm.
But I guess that was my question is because you have people that are like, hey, I'm a small business owner. I don't have health insurance. And I've always been like, well, when you do have to pay for something out of pocket, that's an owner's draw. That's personal. And I always thought that you only can have health insurance plans through your business if you're an S corp.
Oh no,
So
you
that
can have a health insurance as a LLC.
just as a single member LLC, you can get
Mhm.
health insurance in the name of the
Mhm.
business. In order to deduct it, if you had other employees, of course, you can't be biased. It has to be open to everybody. It can't just be, I'm the owner and I'm deducting what I
Right.
want to deduct.
Right. Exactly.
Okay.
If you have employees, it's got to be for everybody. But if you're just a single owner LLC, you're able to get insurance and through the business and deduct it.
Gotcha.
So,
And you just got to make sure, and I've told people at times, even if you paid out of it through a personal account, we can always do a journal entry and account for it as that, owner's
yeah.
investment versus it
Oh,
coming
yeah.
out of the business bank account. So that's the medical. What about the retirement planning, the solo 401k, the set plan, the Roth, or all the things? Is
All
that
the
an owner's draw or is that an actual retirement employee benefit expense on the profit and loss statement?
So it depends on how you have it set up. It can be an
Okay.
employee benefit expense. That's what I will say.
Hmm.
Depending on what you have. Like if it's just a regular Roth IRA, that's kind of like an owner's draw because that has
Yeah.
I hate to say it, unless you have a plan that is set up for the business that because now they have like the Raw 401k. If you have something
Hmm.
like that through the business, then you can use that as a contribution, um, or I should say expense through the business. But for the if you have the solo 401k, even if you have the SEP, if you have the simple, then let me say SEP IRA, simple IRA, because I'm talking as if everybody knows. Then you can deduct that through the business as a retirement contribution.
Okay. Because I had somebody recently where they're like, oh, I contribute to this. And they already had it set up as a retirement expense, but like under owner draw, just so some people break down their owner draw so they can
Hmm.
say, this went to medical, this went to retirement. And I thought about it. I'm like, I'm pretty sure you can write this off. Because I'm getting more clients. I haven't had a lot of clients that actually had retirement planning. So I'm getting older. I'm thinking about it for myself too and now giving more tax planning. I'm like, I'm pretty sure we can write this off as a taxable expense.
Yeah, you definitely
Okay.
can. And I will say just a couple of notes. Solo 401k, solo. So if you have employees, that's not an option for you.
But
The
if your
SEP
spouse, I remember you said for the solos, it can include the spouse though, right?
for the solos, well, the solo is just you. Let me see. Let me double
Okay.
check on that.
Okay. Okay. Okay.
1 second though. Sorry, y'all. I'm getting over a cold. By the way, I did check the entertainment expense did go away with the Tax Cuts and Jobs Act.
Dang.
Yeah.
They snuck that through
But with
2018. Okay.
the SEP, you get to decide. It's really flexible. So the SEP IRA, you get to decide, and you can contribute like up to 25% of your net profit. Now you get to decide, like, okay, am I going to contribute this year? Am I not going to contribute this year?
Right.
If you have employees, if you contribute for yourself, you do have to contribute for them. But remember, the flexibility is you don't have to do it every year. With the
That's,
simple, you can only have up to 100 employees if you have that
yep.
plan,
Yep.
but you have to. Like, there's no
I don't like
option,
being
like, this has been
restricted.
a low year, we're not going to do anything. None of that. There's none of that.
But
So,
what happens if you don't do it? Just a penalty?
it is a well, it's supposed to be a penalty. I don't know who checks on that stuff.
Right, right. Not that we're trying, but I'm always that person. What happens if you don't? Like, is there
No,
a
I
penalty?
am
Like, what's the
too. But
rule?
I so funny enough, I was looking it up a little bit more because I haven't dealt with the simple since I left the retirement world. Like
I'm
as
telling
far
you,
as
more people are realizing, let me go ahead and get my planning together. So I'm getting more retirement stuff. Like, I'm going to take more continuing education on it.
yeah, so I haven't dealt with the simple for a long time. Most of the people I
Mm,
deal with, they'll do a solo 401k or they'll do the SEP IRA. So I was
yes.
just looking it up because I had spoken to someone who was like, their person recommended a simple, and I was like, what they do that for? So I was
Right.
like, what
Why
am
they
I
do
missing? Am
simple?
I missing something? And when I was looking it up, I was wondering myself, like, okay, how are they checking for that? I know there's a penalty, but I'm like, is the IR like how are they checking? Like how are
Right.
they? Yeah,
Right.
like, but
And that's also not to go back to like the 1099s. I tell people a lot of times it's an honesty policy. Like, yes, you should always report folks that you paid. But like you said, if people refuse, if they were right under the limit or right above, you're never going to use them again. But I tell my folks, best practice when you set up any vendor, just get the W-9. And how you get them on the hook is I cannot pay you until you give me your W-9 and your banking information if that's how you're going to pay
exactly.
them. But that's what I would do and just keep it simple. But Elena, before we go, if
Oh, let
anybody,
me
this
jump
is
in
your,
real quick and say that
yes,
yes, you are right about the solo 401k and the spouse. The spouse can contribute.
I just remember when we had our retirement planning
Yeah.
CPA chat, check it out that we did a few months ago. And I remember that sticking to me like, oh, a lot of solopreneurs, you think about the the spouse is like that silent partner. They might not be on paper, but they're there
Mhm.
with you. So I thought that was cool that they can also contribute to the retirement plan because they're as much part of the business, even though it's a solo
Yeah.
business, but you have the village. But yes, if anybody has any questions, we got about 5 minutes before we jump off of the live. But Elena, I like to always give best practices, tips that will allow folks to easily be able to know the difference between, okay, this happened for my business versus personal. I know that this was for meals versus this was for a strategic plan. So, what are some deduction tips that everybody should be doing to make their tax season amazing?
First of all, take some time and go through your stuff.
People don't want to take the
I'm
time.
just telling you, I need to do it right now. I'm just telling you. I did my books, but I want to go through and make sure everything is
Yep.
what is supposed to be.
Yep.
So what I will say is go through your numbers. I always like to tell people create a folder.
Yes.
I don't care if it's digital or if it's in hand. Put all your tax stuff in there because I know stuff is coming in.
Yep.
And the reason why I'm saying that is because I saw something come through today, your tax form, and I was like, another one, right?
Right. Right. And another one.
Right.
Right. It don't
So I
stop.
need to get that organized because going through your email when you're trying to file your taxes, you do not want to miss a tax form and then have to file an amendment because sometimes, depending on the situation, it may be a tax form that maybe you gain interest and it was like a decent amount. It wasn't like your little $10 interest statement. It may
From
have
the
been
credit
like,
union.
oh, you had 700 or whatever. It's enough to trigger for the IRS to be like, you missed this,
Yeah.
right? So
Right.
make sure that you get organized. Um, I still, even though it is tax season, I know everybody is busy. And when I say everybody, everybody is busy. But if even if you cannot meet with someone, like I'm gonna say this, a lot of people don't like good old chat, but
We love ChatGPT. What you talking
ask
about?
ChatGPT what tax forms would you need to file taxes. You can tell it your situation, or you don't have to. It should give you a list of just tax forms. So if you see the form, like that form crossed you, like, oh, I got that form. Make sure that you have it. Um, for my business owners, please, 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 please get those expenses together. We want to write off everything that
Yes.
is allotted to you, please.
But that's business related. Let's not get
Yeah.
crazy with
Oh,
all
business
of the
related. Now let's not make up no stuff. We don't need no problems,
we don't
okay?
need no
But,
mess.
but make sure it is business. Like everything that is available for you. That's what helps the person who helps you. And then also just make sure that you. First of all, I'm gonna give y'all a little tip. I don't know a lot of people know this or not. Some of your tax forms are actually in your IRS account. So if you have not signed up on irs.gov for an account, if you've made payments before though, you should have an account.
I got an account.
It has your tax forms. Like, so if you're missing something or you're not sure what you do not like, what, like, am I missing stuff or I'm not sure if I have everything, check there. Now, they don't have everything, but make sure you have that.
I'm not
Um,
following Carlos up on this cryptocurrency.
oh, about the cryptocurrency.
The
So
last 2 minutes of the chat.
they have a tax form this year. This year there is a tax
So
form.
let's read this out. So my husband Carlos, and bullion is, I guess, the proper term for the precious metals, gold and silver. He wants to know how are they going to be taxed, and is it what about cryptocurrency,
They're gonna be taxed like regular income. Like how are
like
you doing?
stocks?
So there's a tax form. Now here's the thing though. The it's a 1099. If I'm not mistaken, it's 1099 DA. D is in David, A is in Adam. Don't quote me on that because it is very new. It's new this
Yeah, I
year.
was gonna say we haven't touched this. IRS don't fool with crypto.
It
But
it's
this is only if
it's
you
the first
cashed
year.
out. It's not just purchasing it. It's like
Only
stocks,
if you
right?
cashed out. Only
Only
if
if
you
you cash
took
out.
payment in the first year. Not in the first year. In 2025 will you get this form. Now here's the thing. You need to know how much you paid for the crypto.
To begin with.
And the thing is, because it's new, like the IRS does give you some leeway on that. Like they're giving some leeway, like the companies are not having to put the cost basis because that's what it's called. Like how much you
Yeah,
paid is considered cost basis. So
sure.
you need to figure out what your cost basis is
Oh, he
on
knows.
that
He knows.
crypto. And let me tell you why. Because if you do not know and you make up the wrong number and it's
Hmm.
lower than what you
Yes.
paid, you're going
Right.
to pay more taxes than you were supposed to pay on it.
Yes.
So
Yes.
make sure
Yes.
that you can go back and look in your records and see because from what I understand, like they're probably not going to put what your cost basis is. Kind of similar to what's happening with the tax on overtime. Like the
That
employers
blew my
are not
mind when you
required.
told me that with
Yeah, they're not
overtime.
required the first 2 years to put it on your W-2. So it's going to be a rough year. Like we're going to have to figure out how to compute it. Like we have the formula to compute it, but it's like you're going to have to ask questions. We're going to need a pay stub. Even though we don't file taxes using the pay stub, you need a W-2, but we're going to need that bad.
Real quick, I just want to add this. So what Elena's talking about is that on your W-2, it should say like social security wages, this wage, this and that. And they're not including overtime and wages, yet they're putting it on the employee
Yeah,
to
for the like
be
the first two
honest
years.
and add those wages on the W-2. I'm not doing it.
Yeah, you
I'm on
got to
record
do the
saying I ain't
math and
doing it.
all. It's not gonna be cool. I already got a phone call from a friend who doesn't even do taxes, but they called me like, "Hey, somebody's asking me a question," and I'm
Yes.
like,
I don't know
and their
about that.
employer computed it, but it don't look right to me.
Right, right, right. Well, Elena, we are already to the end. I love that everyone's been participating. Please
Yes, thank
like this
you.
video, like and subscribe. Want more CPA tips?
Like and
We do a
subscribe.
CPA chat all the time. So thank you guys so much for supporting the Veronica Edwards Show. We're going to have some more swag coming in soon. We have episodes every other Thursday on the Veronica Edwards Show YouTube channel. You can also go to veronicaedwards.buzzsprout.com. You can go to balancevirtually.com if you want to be a sponsor, if you're part of the V team supporting us. Let us know what topics you want us to talk about. If you want to be a guest on the show, all that fun stuff, let us know. And thank you guys so much. Please let us know how you enjoyed the first live. Elena, thank you so much for stopping
You're
from your
welcome.
DIY HD TV. Can you give us a little smidget of the room? Look, I told
I
Elena she'll
don't
have
have
to give a
nothing
tour of
for
this.
you. I don't have nothing.
I'm messing with Elena.
I
You
just
don't
let
gotta
y'all
show
know there's
nothing.
boxes over there, and my closets and my office are not done.
And I've been trying to read your shirt. What does your shirt say?
Oh, it's Stiletto Boss. Let me see if I can get
Come
all the.
on, Stiletto Boss. Come
Yeah.
on, boss.
So I have a
Yes,
friend in the
yes.
Charlotte area. She has a great nonprofit. She works with young girls, teaching them how to like start businesses and stuff like that.
Yes.
So yeah, this is one of the shirts that she has that
What's
she
her? Do
sells.
you have her information? Drop her information real quick.
I'm gonna drop it. Hold on. Let me
Right.
see.
Stiletto and Boss is what BAWSE, it looks
Yes,
like.
yes, yes, yes.
Yes.
Yeah, I was
Well,
like, let
thank
me
you.
rep her shirt because she's all about business, and I
Yes.
love that.
Well,
She
thank
does
you
some business
guys.
consulting too. So if y'all need a business
Yes.
consultant,
No, wonderful. Well, Elena, thank you. Thank you, V team. We are signing off, and this is going to be on all platforms. See you next time.